more and more talk about this bull market. But I also often see that there are a lot of people whose portfolios are, would say, really out of balance. They're too heavy in one direction, and they're doing a couple of things with that. By having their portfolio out of balance, they're potentially putting themselves at risk in two ways. One, they might be too focused on one sector and actually miss out on some broader gains that come across different sectors. And two, they might be too heavy into something that's actually not going to serve them and could actually go the wrong way for them, which is not what we want to have happening. So we want to make sure when we're building a crypto portfolio, we take into consideration a broad range of coins and some different categories, which is what I'm going to sort of share with you tonight. Now, before I get into that, I want to jump into the charts and just have a little look at the charts. Now, if you don't read the crypto charts, then don't worry about it. I'm going to make this very easy and explain. But this is a chart that I've been watching quite closely. Let me zoom in on this a bit so you can see it a bit better. But this is a chart called Others Dominance. Okay. So this is the total market cap of crypto. So that's the value of all cryptocurrencies in the market, excluding the top 10. Okay. So we're excluding Bitcoin and Ethereum and BNB and Solana. All of these really big cap coins are actually excluding from this. So we're looking at the rest of the crypto market. Okay. And what this gives us the opportunity to do is look at how the rest of this market is performing in relation to Bitcoin. Now we can see if I zoom out a little bit here, for quite a while, we've been sort of heading down. We've been in this downward sort of trend here, even come back a bit more. We can see way back here at the end of 2021 when we hit the end of our last bull run, and we've sort of been in this downward slope, which is not to be unexpected, right? It's quite normal. We see in times like this, when we go through a bear market, we see that Bitcoin has a lot more dominance in the market, which means that Bitcoin's market cap holds a lot more of the overall market rather than the altcoins. But what we're starting to see now is we're starting to see a turnaround, okay? And I'll zoom back in here. And we can see that we've actually come down. So we've come down, we've hit this red line here, which is a support line from a long time ago. We've hit it, we've bounced off it. We've come down, we've hit it, we've bounced off it. And we've come into this purple zone here, which has been what I would call a resistance zone, okay? This is where we've come up and we've hit it, we've come up and we've hit it, and it's stopped wanting to go through, okay? So the value of all the altcoins have been trying to push up in relation to Bitcoin, but haven't quite been getting there. But what's happened just in the last few days, this chart is a daily chart, so every candle represents a day. You can actually see we've come up into this resistance zone, then the red candle, we've bounced down again, but then we've come up, we've had 4 green candles in a row, and we've actually had some really good movement here from the altcoins, starting to create a bit more dominance. So that dominance, again, what that means is that the overall value of the crypto market is made up of all the coins times their prices, and Bitcoin is huge. Bitcoin has over $1 trillion of the market cap, so it's about 60% of the total value of all cryptocurrency. But what this chart is showing us is that 60% is starting to slide, and the value of all the altcoins are coming up. And this is typically something we see with a bull run. Okay. Now we can look at some individual charts here. Let's have a look. Zero, layer zero, again, having a good run out. It's broken out of this pattern. Sui here has had a really good run up. Okay, this is a blockchain token, a new blockchain token. Phantom, again, blockchain tokens, run up, pop back down to some resistance, run up. So we're really starting to see a lot of movement here from the altcoins. And this is why I'm seeing more and more commentary in the market that the bull run is here. Have other people been seeing this as well? Like, just put a little note, a yes or a no in the chat, so I can see what you're hearing. But are you seeing other commentators saying, this is it, this is the bull run, away we go? Yep, Chirag says yes. Yep, Susan says yes as well. So it's great. So we're getting a lot of positive indications here. But I want to temper it a little bit. I want to sort of, just take maybe a little bit of a flip side to this, just to make you aware of something else that's going on, that we may be in the bull run, We may not be. So let's have a look at Bitcoin. Okay. So here's our Bitcoin chart. Let me zoom out a bit. So this is our Bitcoin chart since sort of the start of the year. And we can see we had a big run up here at the start of the year. Okay, we came up from, where were we down here? 38,000. We came all the way up to 73,000, set new all-time highs. Now everyone was raving, oh, it's the halving this year, it's the bull run. What this actually was, it was the ETF volume. Okay, so earlier this year, we had an approval of what we call ETFs. Okay. An ETF is an exchange traded fund. Now, this is something that exists in the share market, has done for a very, very long time. And essentially, it's a way, usually with an exchange traded fund, it's like a basket of goods. Okay. So it's like a basket of different shares and different companies, but it exists as one entity. So that you can invest in a whole bunch of companies, say like the top 10 companies, by just buying one share, which is the ETF, the exchange traded fund. So you just buy into that fund and you get exposure to all of those shares. That's how it's worked in the share market. What the regulators in the United States have done is they've actually taken that model, okay, and they've applied it to crypto and approved what they call ETFs for crypto. Now, it's a little bit different because it's actually technically not an ETF. It's actually technically it's an ETP. Okay, so instead of being an exchange traded fund, it's actually an exchange traded product because in the crypto world, that basket isn't full of other things. It just has Bitcoin in it. Okay, so we had the approval of Bitcoin ETFs. What does this mean? It means that large money managers, so companies like BlackRock and Grayscale, just two, they are some of the biggest money managers on the planet, right? They manage hundreds of billions of dollars of investors' funds, of pension funds, of superannuation funds, hundreds of billions of dollars. And having these ETF approved means that those funds are now able to invest in Bitcoin. Okay. So traditionally, they're bound by the rules that said they could invest in shares and things. Now they're actually allowed to invest in Bitcoin. So it gives them a new way to get exposure. It also gives retail investors a way to buy Bitcoin or get exposure to Bitcoin without actually buying Bitcoin. So, because they were approved in January at the start of the year, we saw a whole bunch of money come flooding into the market. And that's what this big run up here was all this extra money coming in and actually buying up product. Then once that sort of settled, we sort of settled into this downward trend. You can see the red line here running downwards. So we've been in a bit of a downward trend. And with these trends, and again, I don't want to get too technical here, but we'll see we had a high point and then we had another high point. We came down, we came up, and we had a high point, but it was a bit lower. Then we went down, we had a high point, but again, it was a bit lower. So we're making what we call lower highs and lower lows. We had a low here, and then we had another one here. So that's a lower low. And then we came up again, then we came down. We had a lower low. So we're still making lower highs and lower lows, which are indicative of a downtrend. Okay. Now, which coin leads the market? Right? There's one coin that everything else follows. It's the granddaddy, it's the original coin, it's Bitcoin. Yep, thank you, Susan. Okay, Bitcoin leads the market. Everything tends to follow Bitcoin. So we're in this situation where we've got the altcoin dominance coming up, but Bitcoin's still been printing lower highs and lower lows. It hasn't actually changed market structure to show that Bitcoin's in a run up. Now, today's kind of an interesting day. I'm really looking at this because we had a lower high here on the 6th, a low on the 6th of August. We came back up. We had another lower high because it was a high, but it was below the last one. Came back down, but we didn't break below the previous low. You'll see we've hit this yellow line, which is the same point, and then we've bounced off it. Okay, so we haven't created a new lower low, which could be indicative of a change in market structure. Now, to change from making lower highs and lower lows, we want to go the other way. We want to start making higher highs and higher lows. We want to see them start coming up. So we've come back up, and what we want to see is we actually want to see Bitcoin continue to push up here. Okay, we want to see Bitcoin continue to push up, and then it'll come back down, and back up again. But if it does this, we would have created a higher high here and then a higher low there. And then if we continue up past this to create a new higher high, that is a change in the market structure. We've now switched from being in a downward trend to being in an upward trend. And that would indicate, along with the altcoins taking off, that we are much more in a bull market. So what we're seeing right now, if I zoom right in on today, we've actually come up and we've more or less matched this previous high. Now, this is our current candle today. We came down yesterday. This is our current candle. I'd really love to see this candle pop up and close a little bit higher and start to form a new high. Now, I didn't want to dive too deeply into the charts. I didn't want to get too technical, but I did want to give you my thoughts on where we're at with the bull market. Definitely looks like we're starting to run. We're seeing things run, but I am tempering that with the fact that Bitcoin is yet to actually change market structure and is technically still in a downward trend. So I just want you to keep that in mind. Okay. So with that said, we need to build a portfolio. Okay. We want to build a portfolio of coins, and there are three different types of coins, three different categories of coins that I believe we should have in every portfolio. Okay, so let's dive into these. And again, I'm going to ask you guys to type in the chat for me. So the first category of coins are gas tokens. Okay. Now, if you know what a gas token is, please go ahead and type the name of some in the chat for me. Give me some ideas on gas tokens. If you don't know what a gas token is, these are the native tokens for each blockchain. Okay. So not every blockchain, but most of the blockchains have their own native token. And that is the token that is used to pay the transaction fees, which we call gas, for transactions on that blockchain. Okay. So I can see in the chat here, we've got Ethereum, we've got Bitcoin, we've got Solana, we've got Tron. All of these are gas tokens because they're all native to their specific blockchain. So we'll just talk Bitcoin for a minute. Bitcoin is the token that you need to use to pay for fees if you're transacting on the Bitcoin blockchain. It is the token that rewards the miners on the Bitcoin blockchain. So it's essential for the Bitcoin blockchain to function that that token exists and there's demand for it. Same thing with Ethereum, right? So Ethereum is how we pay the gas on the Ethereum blockchain, Tron on the Tron chain, Solana on the Solana chain, Phantom for the Phantom chain, all for the Polygon chain, BNB for the Bitcoin, not the Bitcoin, the Binance chain. So there's a range of all of these coins that all relate to the individual blockchains. And there's a whole bunch of them. We can go have a quick look. We'll go over here and we'll go to CoinGecko. And if you have questions coming up as I'm explaining some of the stuff, please put them in the chat, raise your hand, just let me know and I'll answer the questions for you. As we come over here to CoinMarketCap, and sorry, to CoinGecko, this one, and I'll just zoom in on it a bit so you can see a bit better. But at the top here, above the list of coins, there's actually a heading here that says categories. And I'll go ahead and click on categories. And then you've got layer ones, which are blockchains, proof of work, proof of stake. I think there's even one called blockchains. Blockchain, I know that's blockchain capital. There used to be one that was blockchains. Maybe they do change them around. So maybe that one's gone. But up the top here, we've got layer one, we've got proof of work, we've got proof of stake, which are all types of blockchain. So if I go ahead and click on layer one as a category, it's going to come and it's going to give me a list of all of these gas tokens for layer one blockchains. Okay, so I've got Bitcoin, Ethereum, I've got Solana, I've got Tron, which was already mentioned. BNB, I said. We've also got Ton, we've got Cardano, Avalanche, Near, Sui, ICP, Aptos, Casper. Okay, so there's a bunch of these different gas tokens. Now, why do I believe these are essential in a portfolio? There is utility to these coins. Okay, these coins need to exist for the blockchain to function. Okay. So for the blockchain to function, there automatically becomes more demand for these coins. As the blockchain gets busier, as it will with a bull run, more people need to hold these coins. More people needing to hold them means more buying pressure, means that the prices will rise. Okay. So this is like, to me, this is like a fundamental kind of essential of blockchain, that these are like the blue chip stocks. Okay. These are like your bank stocks, your mining company stocks that are going to be around for a long time, because as long as the blockchain's in existence, these coins will be around and there will be a need for them. So I absolutely believe that we 100% need to start off our portfolio with gas tokens. Now, which ones? Get a selection, get a range, go where you think there's going to be growth. I mean, Bitcoin and Ethereum, obviously good, solid bets. Solana is getting more and more traction. It's the fastest blockchain currently, running at like 65,000 transactions a second. So it's getting more and more transaction. But then there's new players. Ton is a new player. Sui is a new player. Casper, Aptos, they're all new players in the market. And you can see, I mean, you'd have to get into the tokenomics, but you can see Casper's only 16 cents. Sui's only $1.70. We don't know where these things might go. You'd need to dive into the tokenomics. But these are tokens that actually have a utility and there is a demand for them. They're not just some made up token that someone, designed for their product or because their friends wanted them to design a crypto. It actually has utility, it has a purpose, and there is demand for it. Okay, so gas tokens, 100% are the first pillar in a crypto portfolio. Okay, next up, DeFi platform tokens. Okay, if you know what these are, give me some names in the chat. Same again. So DeFi is decentralized finance. It's the subset of crypto that allows us to perform banking functions, essentially things that we used to need a middleman or uh, a broker to do. Okay, we can lend and borrow, we can earn interest, we can provide liquidity. We can borrow, straight out borrow coins against our own equity. All of those things that you would have needed a broker or a bank to do in the past. Decentralized finance, DeFi, allows us to do that ourselves. Now, why do I believe these belong in a portfolio? Because they 100% represent a platform that has real value. Okay. So in the chat here, I've got some names. I've got Aave, I've got Uniswap again, MakerDAO, Zeus, and Curve. Zeus, I'm not familiar with, but the others, absolutely. And Zeus may well be. They're all platforms that allow us to do these functions. Okay. So on Uniswap, we can swap from one coin to another in a decentralized way. We don't need a third party. We just do it there. On Aave, we can stake our funds and earn interest. With MakerDAO, we can go ahead. We can actually lock up currencies and mint stable coins with that. With Curve, we can earn yield. There's a lot of different opportunities that we have to actually earn on our crypto. Essentially, we can earn yield, we can provide liquidity, get rewarded with trading fees, and actually take advantage of that DeFi ecosystem. Now, the reason that I believe that these tokens are a really important part of your portfolio is because this is where the magic happens in terms of people actually using crypto as a tool on a day-to-day basis. Okay, I know I have funds staked earning me yield right now as we're doing this presentation. I'm making money in crypto, and it's those DeFi platforms that allow that to happen. Now, the tokens themselves, in this case, they act kind of like a share in some ways. Okay, if you're investing in the traditional share market, then you buy shares because they represent the company that you believe in. Now, in the case of shares, that actually gives you a piece of ownership of the company. Okay. In crypto, that doesn't happen. Owning the token, owning Aave token doesn't give you any ownership in Aave. However, it runs on the sentiment that goes with Aave. So if people believe in Aave, if Aave is doing well as a platform, then people want to hold the Aave token, and therefore demand will drive prices up. Laws of supply and demand. We can make assessments of these platforms as well. Okay. Much like with the gas tokens, we can look at the blockchain. We can look at how popular the blockchain is, how fast it runs, how many users are coming onto it, how many transactions are being processed through it. Is there a utility for the blockchain? We can look at that. With the DeFi platforms, we can look at the same thing. So we could look at things like TVL. Okay. So TVL stands for total value locked. So we could go and find out in Aave how much of people's crypto is actually locked up in smart contracts on that platform earning yield. Okay. We could look at the number of different vaults that they offer. Like how many different products are they offering? These are things that we can use to actually make an assessment of these platforms because it's something that's like sadly lacking in a lot of crypto is that ability to make an assessment of a coin. Who would agree with me that most of the time when you've been buying crypto, especially if you're just starting out or thinking back to when you were starting out, you were guessing? Be honest, you were guessing and hoping about which coins were going to go up. Okay. I know this is true. I have friends that have portfolios with dozens and dozens and dozens and dozens of coins in them. And I'll say, why did you buy that? Why did you buy that? I don't know. Thought it was going to go up. People hope and pray in this world. And a lot of the time, people have had no experience investing for themselves and they come into this market and they just throw money straight at things that they hope are going to go up because they've got no way of making an assessment. Okay. So these first two categories of tokens, gas tokens and DeFi tokens, they allow us to actually look at the platforms and make a decision on do we think this platform has inherent value and therefore the token that goes with it will also have inherent value. So again, this is more your blue chip stock. These are the sort of things that want to underpin your portfolio. Now, if we come back over here to CoinGecko, we can come back again to categories. And under categories here, there is actually a DeFi category somewhere. There's layer two blockchains. We can go and look at there. Decentralized exchanges. They do change these things around, but there was one just called DeFi. Right. I'm not seeing it, but let's just go into a couple of the smaller uh, automated market makers. Okay. So there's a couple of those were mentioned. So, top of the list here, Uniswap. We already talked about this. So, an automated market maker is another name. It's a fancy name for a decentralized exchange. Okay, so if we're using a decentralized exchange to exchange our coins, we've got Uniswap, PancakeSwap, really well known, 1inch and Curve, really well known on the Ethereum blockchains. Radium's the largest DEX on the Solana blockchain. Aerodrome Finance, great project taking off. Okay. So you can come in here, you can have a look at these, you could go and have a look at them and go, well, how much money's in it? If one of these platforms has only got, $1 million in it, in the world of crypto, does that show a lot of faith in the platform? Not really. But even over here, it actually tells you the market cap of them. And if you click into them, if we go and have a look at Radium, it probably tells me the TVL. Yeah. So it tells me right here that Radium, there's over $1 billion of users' funds locked up in that platform. Does that tell me that people have faith in that platform? Absolutely. So it gives us a way to actually make an assessment of those platforms. Okay. Yep. Pendle and Jupiter. Jupiter's another great one, Isaac. Yep. It'll be in this list somewhere. It's on the Ethereum, on the Solana blockchain, along with Orca, etc. That's great. So we've got two categories so far. Okay, we've got gas tokens number one, DeFi tokens number two. Any questions for anyone that have come up so far based on what I've shared with you? Just go ahead. You can throw a question in the chat or you can raise your hand. If there's no questions, I'm going to move on and jump into number three. Cool. Nothing coming up. No hands coming up. So, number three. And I've got a bit of a broader definition for this than a lot of other people do. So this will be an interesting little chat. But number three is meme coins. Okay. Now, I don't believe that meme coins are solely funny dog coins or frog coins or animals with hats on or cat coins or whatever they are. This is where we think of meme coins. Okay. So people think of meme coins and they think of Dogecoin and Shiba Inu and um, Pepe and Bonk and all of these crazy coins that actually have zero utility at all. They are just literally a meme. Yeah, cat with hat, Trump coin, absolutely. So those are meme coins. However, to me, the way that I define this is that a meme is a coin that exists without having that underlying value like we see in the DeFi coins, okay? Or the gas tokens. They have that underlying platform that that token directly relates to. It's a platform, it's got utility, it's used on the blockchain. Whereas a meme coin doesn't. So, yes, you've got your Dogecoin, your cat with hat, your Trump coins, your Pepe's, all of these crazy things. But you've also got all of these other categories of coins. Like right now, really popular uh, AI. Okay, so the category of AI coins. Um, Gaming is another one that's really big. Okay, I classify these coins under meme as well because essentially they represent products, but those products don't have value on the blockchain like a DeFi platform does. Okay, we looked at whatever we looked at there. We looked at Radium and we saw that it had $1 billion of user funds locked in up in it. Okay, if we went to Aave as an example, I can see here that Aave has $12.5 billion of user funds locked up in it. So the platforms exist that give those tokens a reason to exist. For anything else, the token only exists as a representation of the project, but the project doesn't have any actual inherent value on the blockchain. Okay. So AI projects, they're building cool tools, but they're not taking user money. Okay. You can't put your money into those projects. Um, gaming is great. Like lots of people love gaming. They like playing games, but you can't invest your money in a game. You can play the game. So it hasn't got that direct connection to being financial market. Okay. So memes to me are, yeah, things like the category of AI, the category of gaming, and then, yes, your Doge, your Pepe, etc. These all go there. Now, why do I want these in a portfolio when I've been talking about these other coins that have utility and have solid platforms behind them? Why do I want to go meme coins? Well, that's where some really explosive growth happens, right? This is where we see sometimes we'll see these 50x and 100x returns on some of these coins and things like AI is hot right now. It's the latest thing. More and more projects are launching. We're seeing more and more AI tokens. So it's likely in the bull run that we will see some of these AI tokens um, take off. And this is where you can make those big gains. But this is what I said right at the start as well. I see a lot of people whose portfolios are weighted really wrong, in my opinion. They're weighted entirely into sort of the meme coins or 90% into the meme coins and the hope that they're all going to go up. Okay. It's not going to happen. They're not going to make 100x on every coin. You might get lucky and have one or two that go up to that 100x. And you definitely want exposure to them. But you've got to watch out because a bunch of them could go to zero. You know, things like Trump coin and things like that, they get launched in a heartbeat and they can get rug pulled. There are so many coins coming onto the market. During the last presidential debate between Donald Trump and Kamala Harris in the States a couple of weeks ago, there were over 100,000 meme coins minted on the Solana blockchain during the period of that debate. Like it's just ridiculous. So many of that, so many of those coins will end up going to zero, which is why we want to be cautious with them. We want to have some exposure to these categories, but we don't want to have all our money in there because if we're stuck with coins that go to zero, then we could end up with a significant portion of our portfolio being wiped out, which is why we want to make sure we have a combination of all three. Now, there's a couple of questions come through. Ish asked, what do I feel are the most prominent growth sectors currently? Well, I've covered a couple of them. I think um, gas tokens on some of those newer blockchains are probably a good bet. Looking at Sui, um, Casper, those sort of newer blockchains that are just coming on, just getting adoption, I think those are probably a really good bet. And then in the meme sort of side of things, I mean, I'd be looking at some AI stuff, some gaming stuff. I think those will probably pop off. But again, I want to make sure that my portfolio is balanced. Okay. So you might want to go, 40, 40, 20. You might want to think about what's your risk tolerance here because some of these other coins might not do the 50x and the 100x, but they'll do a 5x or a 10x. And that's an incredible result, right? One of the things I see in crypto is we get so tied up in these 100x returns, and that's our expectation. And we forget that if you do something that goes 5 times your money, that's an incredible freaking result, right? When we're used to putting money in the bank and investing it, saving for 5%, or we might have a mutual fund that goes up at 7 or 8%, or, property, other than the anomaly of the last few years, but property at, 10 and 15%. If you were to do 500% on your money on a couple of coins, that's an incredible result. So yeah, we really want to make sure that we are balanced. Doesn't buying an AI coin mean that you're providing liquidity to that project, much like angel investing in TradFi? No, not really, because the liquidity stays in the coin. It's not being used by the project. So you're providing liquidity to the coin, which can then make the coin look better and drive the token price up. If the project, I mean, no is not the right answer. So generally, it doesn't directly impact the project unless they have their own supply of that token and they're able to use that supply of that token to fund the project. But that doesn't always happen. And it also depends on the tokenomics of each individual project. So it's a great question there, Susan. But I would say overall, yeah, not so much. If you were doing a pre-sale or something like that, then yes. So if you were able to get into a project before it launched, then yes, your money is going in to fund the project. But once it's in the market, much less so. Shirag's asked, what ratio do I suggest? So to me, I mean, this is such an individual question, right? It's such an individual question because everyone's risk tolerance is different. So you might go, 40, 40, 20, as I said. You might go, 30, 30, 40. So you've got 60% in sort of your more mainstream kind of categories, 40% in the memes. But that to me, that's pretty high. Like that to me is getting pretty high. Personally, it depends on your risk tolerance. Like a lot of the stuff, depending on where we are in the market cycle, I wouldn't want to see any more than 20% of someone's portfolio in those memes. I would want to see more spread across those other categories. But again, this is going to depend on your risk tolerance. The other thing that you could be aware of too is that this might move. This might be a movable feast, right? So you might have your ratios here, but as the market takes off and things become more apparent, you might be able to actually move these things along and go, you know what? Right now, things are a bit stagnant. I want some more of these more stable coins. So we'll go like this and we'll push this down to 5%. Okay. But as we see the market moving, we start to see things coming up. We might see that, hang on, some more of these AI coins or these meme coins, your bonks and things, they start to take off. Then you might go, you know what? I'm going to take this and I'm going to push it back this way. And I'm going to take this 5% and I'm going to change it, and I might go up to 15% of the more volatile stuff. Okay. You can play it by ear and you can change. You're not committing yourself to a lifetime of this is how your portfolio looks. But what I see all the time is I see way too much where, you know, this is sort of going on, and this number here is not 15%, it's 80%. Okay. And people are sitting and waiting and hoping. And then what we get into the cycle of crypto, right? Where uh, we go up and down, up and down, up and down. And people are unsure when to sell. So if they buy, they come in and they buy here and they go, yep, fantastic. I've made a bunch of money. But then it comes back down. And now, they're in the red and they're underwater and they're waiting for it to come back up. Okay. Now, this waiting period, I mean, if we're talking about bull markets and bear markets, I mean, this could be 3 to 4 years between bull markets in our usual cycle. And this is why if you're heavily weighted towards these meme coins, then that loss there is going to be, a lot heavier. We've seen the market tank by 95%. Okay. So after a bull run. So we're at the stage now where we think we're at the start of the bull run. So right now, you might be more into the DeFi tokens and the gas tokens and have a selection of the AI tokens or the gaming tokens or just the meme coins if you like Shiba Inu or Doge or whatever they are. As the market starts to move and we see things start to come up, if Bitcoin starts to print higher highs and higher lows and we see a real change in market structure, then you could, potentially look to make a bit of a change in that allocation and how it works. Okay. That's how I generally tend to approach it. I tend to think about where's the market, where are the opportunities, where are the moves. But the other thing that I want to make you aware of is that I don't go nuts. Okay. I won't be owning a hundred coins in this bull run. That won't be me. I won't put a number, but it'll be nowhere near 100 coins. But I believe the utility of those gas tokens is important. I believe the DeFi platforms are important. And I actually, one of the students in our Wealth Farm program actually um, put a comment up in our group chat um, maybe 3 weeks ago. And he was talking about another commentator, a YouTube that he watches that says sort of used to follow all the trends and used to go, you got to be on AI coins, you got to be on gaming coins. And now he's come back to a more simple platform where he believes gas tokens and DeFi tokens, right? Which is, funnily enough, what we've been teaching in Wealth Farm for the last 3 years. But what his philosophy was, which I think is actually really good, is he looks at each blockchain and goes, okay, well, let's pick a blockchain. So let's pick Solana as a blockchain. So I'm going to hold some Solana because I believe in the Solana blockchain. I believe in um, the movement. I believe Solana is going to grab more value. Like Solana is worth 150-ish dollars right now. Um, where are we? Yeah, $151. I remember when ETH was at 80 and $90, before it shot up to 4,000. So who knows what's possible with Solana from $150. But in this scenario, this guy was saying Solana, and because I like Solana, I'm also going to take one of the platform tokens from Solana. So whatever the biggest platform token is. So in this case, Radium. Okay. So this was another commentator that's following a very similar pathway as to us, but he was breaking it down and saying, right, if I'm going with Solana, I'm going to go with the gas token, Solana. I'm going to go with a DeFi token from that blockchain, which in that case might be Radium, just because it's the biggest change. And then he also said a meme token. So on Solana, I don't know, you might go for like a proper meme token like Bonk, something like that, and that gives you exposure to that Solana ecosystem, and you could map that across to other chains. That's just another way to think about what I was saying. Like I was sort of saying that I like these three categories, right? Gas tokens, DeFi platform tokens, and memes. This is just another way to think about it. You could go, wow, okay, what if I had a little bit of exposure to each of the blockchains that I like? So if I look at Solana, I think is good. If I look at SUI, SUI, new one. So I go, okay, I'd have some SUI. I'd have a DeFi token maybe for SUI swap or whatever the platform's going to be, and whatever a meme is on there. If we look at another blockchain, so like Base, okay, there's a lot of hype and a lot of talk around Base at the moment. So Base is the blockchain that has been launched by Coinbase. Okay, now Coinbase is the largest exchange in the United States, operates globally. It's a publicly listed company, so they have financial regulations and things they have to fulfill, but they've launched their own layer two blockchain as well. Okay, so there's a lot of talk going on around Base. So you might want to own a gas token, which is Ethereum, funnily enough. They haven't got their own token, but Ethereum, and then you might want to own a DeFi token and a meme token there. So there's various sort of ways to think about this, but I just wanted to give you that structure in this presentation of having those three types of categories, the three categories of coins, and thinking about how you can actually structure your portfolio around those. Maybe come back to the chat here. Should we factor in if a coin has been through its first cycle or multiple cycles when investing? Does that affect the potential profits? That's a great question, Ish. It is something to factor in. It's really interesting. And I'm sort of curious. I'd love to answer this question in 15 months' time after the bull run, because I've been seeing commentary. Like, if we come and look at the charts again, let me pull this up for you. If we come, say, to Ethereum as a good example of this. Okay, so let me zoom out on Ethereum. Oops, don't want to draw that. Let's get my tools right. So this is Ethereum here, and this is Ethereum running up from here. In this example, we're running up from $300 up to $1,500, right? So at 5x, it went up massively. That's the 2017 bull market, and we can see what a steep rise that was. Okay, when we zoom out, they go from 2017 to 2021. There's our all right, let me just put that line back. There's our 2021 high up here to the right, and it makes our 2017 high look tiny. So if we applied that factor of, oh, it's already been high, is it going to go back again? I don't know. Then we would have missed out on these gains, where we ran from, well, we got down here as low as $80, and we ran up to $4,800. Okay. Then we've come down again. We've been as high as, where are we in here? About $3,800. We've come back down to 26. But is it conceivable that we'll just come past and blow this out of the water? I think it's completely conceivable that Ethereum could well and truly shoot past that and end up at 10,000. And then your 2021 bull market's going to flatten out and look like this. It'll be much less of an impact. So I think we do need to factor it in. But I think it's a case by case basis, okay? Because if we look at something else, and I'm trying to think, sushi, I think, was the example. No, this wasn't the example I was looking for. But yeah, actually, this is a good example. So sushi here got up as high as $23, and it's now at 70 cents. So it's going to have to do a 23x just to get back to its previous all-time high. Is that possible? Yep. Is it likely? I don't know. In the time where narratives do drive things, so like AI and gaming right now, the last bull run was very much a DeFi bull run, right? So Sushi's a DeFi platform. DeFi was sort of born really 2018, 2019. So when we had the bull run of 2021, DeFi was really the main narrative, right? So all of those tokens ran up. So yeah, I think, sorry, it's probably a bit of a non-answer. I think we should factor it in, but I don't think we should discount coins because of it. Okay. I mean, this is going from 70 cents up to, yeah, $23. So that's, a 30x to get back to its all-time high. Is it then likely to eclipse that 24 and go to 50? Well, then you're doing 60, 70x. Is a project like Sushi likely to do a 60x in this bull run? I think probably not. That's more where your new AI projects. So I'd probably be looking at how far off those all-time highs they are. Isn't there usually a delayed reaction of alts after the BTC bull run? Yeah, there is. It's a great question, Susan. So we'll see Bitcoin go first generally, and then the altcoins go later. And actually, on the dominance chart, we can actually see an example of that. That here, oh no, that's not the chart I was looking for. Oh yeah, here we go. So the bull run actually finished about here somewhere. Okay. But then the altcoins kept running. So we often do see this difference where Bitcoin leads the way, but then Bitcoin's growth will drop away. The altcoins will continue. I do feel like that will shift and change though. Okay. We've seen some massive Bitcoin cycles. It's currently at whatever it's at right now, 63,800 US dollars. How much growth will we see in Bitcoin? You know, and that last cycle, it basically tripled. It went from 20,000 to 60,000. Could we see triple again? Yep, I think we could see triple again. So we could see a 3x. Are we going to see a 10x out of Bitcoin? I don't think so. Okay. So we've got to look for where those opportunities are. So if Bitcoin runs and leads the way, great. But we're going to get bigger gains in the smaller cap coins. Okay. And I'd also be looking at a mix of these in terms of, the size of the coin. So with your gas tokens, you might look at something like Ethereum. Ethereum's a great solid coin. Solana's great. But if you were looking at something like Casper or one of these newer coins, they got a much smaller market cap. So, having a mix of that is 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 important. Ish there has said in response to Susan that her understanding of the history is that BTC, then ETH, then the alts. Yep, that's pretty much it. Do you see any market correction before the bull run kicks off, considering macro environment, politics, war, etc.? That's so hard to answer. The election in the US in November will have some sort of impact, I believe. Um, we could see another leg down before we kick up. Like if I come back to this Bitcoin chart, it could be entirely possible that we do come back down and have another leg down. Where are we? November. There's the election is the 5th of the 5th of November. Just here is where the election's going to happen. So it's quite possible that we could have a leg back down and easily hang around there. So that impacts things. Geopolitics, I don't know. We've seen the crypto markets move with stock markets and things, and we've seen them move against stock markets as well. So I'm not so sure about geopolitics. Then you can look at macroeconomics. Okay. If we look at things like the M2 money supply and the global liquidity cycles, so global liquidity cycles tend to run in cycles of 65 months. Okay. There's a theory that says that Bitcoin's better correlated to the 65-month theory. But I mean, 65 months is, I mean, it's more than 4 years. I'm just trying to do the math. It's 5 years. So it's like a 5-year cycle, but we haven't seen that yet. So there's various sort of things. I think all we can do is pay attention to what's happening right now and what we're actually seeing in the charts. That the rest of it's sort of speculation. Yeah, Uniswap didn't make a comeback compared to 21. Uniswap got as high as $80, I think, um, in that market. Pulse Chain, what are my thoughts on Pulse Chain? I honestly don't know a huge amount about it. I tended to fall into the camp of I don't want to call it, I don't want to use the S word. I don't think it's going to live up to the hype that people promised that it would do. Um, I think it was a project with a big promise that would need an enormous amount of liquidity and things to pull off what it promised to do. I think much better off focusing on where the attention is, like the growth in Solana over the last 18 months is crazy. And then you're seeing things like Sui come in as a new layer one, which promises to be, 5 times as fast, um, 5 times as fast as Solana, and they're bringing their own DeFi marketplace in there. I think those sort of chains with real utility are a better place to focus for sure, which is cool. Cool. We're coming up on the hour, so I want to wrap it up at 7 and not keep anyone. So if you've got any other questions, please do go ahead and throw them in the chat. What I would like to do is I'd like to extend an invitation to you. I'm gathering some data. I'm working on a couple of projects and I'm preparing a book and things like that. And I'm actually gathering data about people's portfolios. And the way I'm doing this is through a series of portfolio audits. So I jump on a call and I ask you a bunch of questions about your portfolio. We don't have to talk numbers. You don't have to share your numbers with me if you're uncomfortable. To me, it's more about the makeup of your portfolio and what's in your portfolio. And then I can give you sort of my thoughts back on what you've got there and what direction I would like to go in. So I would love to invite you to book in a call and jump on with me and actually have a little portfolio review, see where you're at. And as we are heading into the bull run, I'm just going to drop my call link into the chat here. Uh, there you go. Um, yeah, jump on, have a portfolio review, talk about where we are in the cycle, look at what changes and things you might be able to make in your portfolio based on, what's in there now, and making sure you've got yourself actually set up to take advantage of, the coming bull run. So I'd love to invite you to book a call. No obligation. Obviously, we'll get on there. We'll talk about your portfolio. I'll give you some advice. I will tell you on the call what we do at Wealth Farm as well. But again, no obligation, no hard sell. If you think some education and some coaching is a good idea for you, then we can talk about that. But otherwise, I believe you'll get a bunch of value out of just chatting and having a look at what's in your portfolio, what you might want to, roll over, what you might want to replace, what you might want to double down on, and have a look at those things. I know we've got a couple of Wealth Farm students here on the call, and also another student from before Wealth Farm even. And I know those guys have all got tremendous value out of what we teach and what we do. So yeah, if you've got more questions, guys, if I've got a couple more minutes. Yes, I will get recording out for those that were unable to make it. We had about 40 people register for the call, and we've got 13 of us here, so there's a bunch that missed it. So I'll get the recording out to them. And yeah, I'd love you to go ahead, click that link, book in a call, and have a chat. As I said, no obligation, no hard sell, but I'm gathering information, so it would be very useful to me just to sort of understand some more how some portfolios are built up. And also, I believe it'd be very valuable for you to have that chat as well. So no more questions coming through. Some thanks coming through. Thank you, Ish. Thank you, Shirag. I appreciate it very much. Thank you guys for taking time out of your Thursday evening to come and sit and listen. Thanks, Melinda. Yeah, jump in, rewatch it. Yeah, let me know. Jump on, book a call. The link's there. You can scroll back up. It's meetpaul.co/30. meetpaul.co/30. You can use that link. If you're watching the replay, this extends to you as well. Very, very welcome to book in a call so we can do a portfolio review. I can gather the data for my research that I'm doing. You can get some insights on where you might want to go to be ready for this bull run that inevitably looks like it is coming on time on the 4-year cycle, which we really love. All right. Thanks, everyone. I want to say have a great evening. Thank you for being here. Thanks, Karen. Thanks, Isaac. We'll see you all soon. All right. Cheers. Good night.